Want to know which stocks to trade after yesterday's market dip? We've got a handful of penny stocks to consider, but first, make sure you're part of the online money machine community by subscribing to this channel. When there's a large sell-off in blue chip stocks, cheaper stocks tend to move on their own accord. While this may be true 99% of the time, there are exceptions, like today. Selling pressure has been in play for the better part of the last 5 days in the S&P and Nasdaq. Looking at broad market ETFs like SPY and QQQ, we see that both pulled back to critical technical levels. And aggressive selling in things like tech added more fuel to the fire, which weighed down other related sectors. As of mid-morning on February 23rd, stocks have rebounded strongly. Many have even regained levels higher than their opening prices on Tuesday. Here are 4 stocks to watch coming out of this recent dip. Number 1 is SuperCom, ticker symbol SPCB. Shares of SuperCom have been depressed during the same period as the tech sector. But what was keeping SPCB shares depressed outside of the broader industry? Well, this year SuperCom has taken a stance and looked at making 2021 a year for growth. With that, the company brought on a new CEO and recently buttoned up a $7 million financing commitment this month. Number 2 is Imagine, ticker symbol EMAN. Imagine's another tech stock that has been on a lot of watch lists. The company provides microdisplays used in different applications including military and commercial AR and VR devices. Earlier this year, the company received a notice of allowance from the U.S. Patent and Trademark Office for the patent application titled Microdisplay with Reduced Pixel Size and Method of Forming Same. With this came a move in EMAN stock for the first 7 weeks of the year. And obviously, the latest drop saw some concern. But judging by the reaction from the rest of the market, this stutter step may have been just that. Imagine is another one of the companies focusing on growth this year. Toward the end of 2020, the company had expanded its New York manufacturing site to support this initiative. The company is set to begin the build-out of that space this quarter. As a result, it increases Imagine's existing cleanroom by roughly 50%. This will house a production tool for the company's high-brightness direct patterning technology process. Imagine is also expected to hire additional production and engineering personnel this year. And next up is Ideanomics, ticker symbol IDEX. Like Imagine, Ideanomics has also felt the same pressure that other tech stocks experienced over the last few weeks. Following 52-week highs of 553 during the first week of February, IDEX stock slid roughly 50% after hitting Tuesday's lows of 271. Like many tech stocks, IDEX has bounced back strongly. At the lunch hour, IDEX was back just above 320. And Tuesday's momentum may not have been solely a result of broader industry momentum. Ideanomics announced that its portfolio company Solectrac expanded its reservation campaign for Solectrac's all-electric tractors. And finally, we have Savara, ticker symbol SVRA. In the biotech sector, Savara has been very quiet this year when it comes to headlines. Savara develops treatments for rare respiratory diseases. Toward the beginning of December, the company ended up stopping its development of Arovank and shifted its focus to Malgradex pulmonary treatment. Okay, so now you have a few new ideas as you look for possible trades to make. As always, you should talk any trades over with your financial advisor instead of relying from tips you read online. So what do you think? Is now the time to buy?